Welcome to World's UK, your trusted source for breaking headlines, global insights, and sharp analysis from around the world. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. The world of oil has always been a world of power measured in American dollars. For generations, the global oil market has been the backbone of international finance, with the US dollar at its very core. For decades, every barrel and every deal was priced in the greenback, cementing the dollar's dominance. Oil and the dollar became inseparable, creating a system where energy and currency were tightly intertwined. But in early 2026, Venezuela shattered this order with a bold move, launching the world's first major oil trading hub outside the US dollar system. This was not just a business decision, but a statement to the world. The hub will use the Chinese Yuan not as a business tweak, but as a direct challenge to the global status quo. For the first time, a major oil exporter was openly rejecting the dollar's grip. This partnership was quietly forged between Caracas and Beijing, Venezuela, desperate for a lifeline, and China, eager to expand its influence. Behind closed doors, months of negotiations led to a pact that would send shockwaves through the financial world. Together, they've built a new system for selling oil, bypassing Western financial controls. This new route allows Venezuela to access markets and capital that were previously out of reach due to sanctions. The hub, a network of floating storage and digital transactions, signals a seismic shift in global power. Oil now flows through new channels, tracked by digital ledgers and settled in yuan. It's a blow to the petrodollar system, threatening the dollar's role as the world's reserve currency. The very foundation of global finance is being tested, as old alliances are questioned. For Venezuela, it's survival. For China, it's a calculated step to elevate the yuan. Both nations see opportunity in this disruption, hoping to reshape their futures. The world now watches as the US and President Trump face this audacious challenge. The White House scrambles to respond, aware that the stakes are higher than ever. Old certainties are fading. A new era is dawning. The rules that governed oil and money for decades are being rewritten before our eyes. This is more than a change in oil trading. It's a realignment of global power. Leaders across continents are recalculating their strategies, sensing the winds of change. The Venezuela-China partnership has opened a new front in the US-China economic rivalry. The world's two largest economies are now locked in a contest that extends far beyond trade. This isn't just about oil. It's about currencies, sanctions, and shifting influence. The outcome could redefine how nations wield economic power in the 21st century. As the first yuan-denominated trades settle, the world wonders, is this the end of the dollar's reign or just a tremor? Investors, governments, and ordinary people alike are watching for the next move. The answer will shape the decades ahead, influencing not just markets, but the very balance of global power for generations to come. Venezuela's strategy was born from years of crippling US sanctions, which isolated the country from the global financial system and forced its leaders to rethink how to survive in a world where traditional trade routes and banking channels were closed off. Locked out of global finance, Venezuela had to innovate, so it created a floating fortress of oil, a bold move that would change the way oil could be traded and stored on the world stage. In late 2025, Venezuela amassed a fleet of tankers, loaded with millions of barrels, and anchored them in Southeast Asia, near China. This was not just a logistical feat, but a calculated act of economic strategy. This floating inventory acts as a strategic reserve, guaranteeing Chinese refiners a steady supply, safe from US interference and the volatility of global politics. With oil already in Asia, Venezuela bypasses Western shipping lanes and financial institutions, sidestepping sanctions and the risk of asset seizures. The partnership is simple: Venezuela has oil, China has demand. But beneath that simplicity lies a complex web of logistics, diplomacy, and mutual benefit. By pre-positioning oil near China, Venezuela became indispensable to its biggest customer, ensuring that supply disruptions would be nearly impossible. This logistical move set the stage for the financial revolution to follow, as Venezuela prepared to trade oil in new currencies, and on its own terms. The floating fortress is more than storage. It's a symbol of defiance, resilience, and a new model of trade that challenges the old order. Geography and logistics now trump traditional financial gatekeepers, shifting the balance of power in global energy markets. China's willingness to engage completed the puzzle, giving Venezuela the market and security to launch its yuan-based hub, and opening the door to a new era of oil trade. A fleet of ships became a revolutionary economic tool, turning the ocean into a vast mobile vault for Venezuelan wealth. The ocean, once a barrier, is now Venezuela's greatest ally, an ever-shifting frontier that protects its resources and redefines its future. For half a century, the petrodollar system has made the U.S. dollar the undisputed king of global oil markets, shaping the very foundation of international finance and trade. Oil producers around the world have sold their crude exclusively in dollars, ensuring relentless global demand for the greenback and granting the United States immense economic and geopolitical power. This arrangement allowed America to run massive deficits, print money with impunity, and wield sanctions as a powerful weapon against adversaries. But now, Venezuela's new oil trading hub is a direct assault on this decades-old system, challenging the status quo. By selling oil in Chinese Yuan, Venezuela is creating a parallel market, one that operates outside the reach of U.S. control and influence. For the first time in modern history, a major oil producer is offering large-scale sales in a currency other than the dollar, signaling a seismic shift in the energy market. This isn't just a symbolic gesture. Millions of barrels are now available for purchase in yuan, and the world is taking notice. Countries can now buy oil without ever touching the U.S. financial system, bypassing SWIFT and the powerful banks of New York, reducing their exposure to American oversight. Each transaction in yuan chips away at the dollar's dominance, gradually weakening the effectiveness of U.S. sanctions and the leverage they provide. This is about sovereignty and independence. Nations are increasingly frustrated with the U.S. weaponizing the dollar to enforce its will on the world stage. The Venezuela-China initiative is more than a business deal. It's a blueprint for de-dollarization, inspiring others to consider alternatives. If other major oil exporters like Russia or Iran join this movement, the petrodollar's reign could face a genuine and unprecedented crisis. The dollar's dominance isn't over yet, but the foundation is visibly cracking, and the world is watching for the next domino to fall. The global community is closely monitoring these developments, eager to see which nation will be the next to challenge the old order. The rules of global finance are being rewritten in real time, with every new oil contract signed in yuan. The petrodollar era is truly under siege, and the outcome will shape the future of global power. The news from Caracas hit Washington like a bombshell. President Trump, seeing the yuan-based hub as a direct challenge, is furious. Traditional sanctions are less effective now, with Venezuela operating outside the dollar system. The White House scrambles for new tactics. Secondary sanctions, targeting any company involved in the yuan oil trade. It's a high-stakes gamble that could alienate allies and fragment the global economy. Trump's rhetoric is blunt, promising major consequences for Caracas and Beijing. Yet, the more the U.S. pushes, the more it drives others to seek alternatives. Inside the administration, debate rages, escalate or show restraint. The world waits to see which path Trump will choose, and what it means for the future of U.S. power. For China, partnering with Venezuela is a masterstroke. It's not just about oil, it's about making the yuan a true global currency. For decades, China traded in dollars, exposing itself to U.S. financial risk. Now, by trading oil in yuan, China builds real demand for its currency and insulates itself from sanctions. The yuan-based hub keeps transactions within China's financial sphere, boosting its economic security. This move promotes the yuan's internationalization, encouraging other nations to hold it in their reserves. The oil hub shifts the yuan from ambition to practical reality. It's also a geopolitical play. China offers an alternative to the Western-led order. The yuan-based oil hub is both an economic tool and a political statement. It signals a new power rising, with its own currency and vision for global trade. The world is taking notice. The Venezuela-China move echoes India's own energy dilemma. After Ukraine, India ramped up Russian oil imports, facing Western pressure and sanctions. Unlike Venezuela, India tried to balance, trading in dollars but exploring alternatives. The West responded with tariffs and sanctions, forcing India to seek new markets. India's strategy: diversify exports, adapt and avoid direct confrontation. Its refineries process tough crude, giving it flexibility. India isn't dismantling the dollar system, just navigating its constraints. Both India and Venezuela show that major nations are forging their own paths to energy security. The global order is fragmenting as countries refuse to be dictated to by Washington alone. The yuan-based oil hub is accelerating the fragmentation of the global energy market. The unified dollar-based oil market is splitting into rival blocks, the West, anchored by the dollar, and a new bloc led by China and the yuan. This could mean separate oil benchmarks with prices diverging between blocks. Trade flows are being redrawn. Sanctioned oil heads east, while Western markets pay a premium. The world economy is being rewired along geopolitical lines. The risks, more volatility, politicized access, and regional shortages. The opportunity, nations can break free from systems they see as unfair. New partnerships and supply chains are emerging. The global market of the past is giving way to a fractured, multipolar future. Energy security will depend on political alignment as much as money. The rules of the game are changing fast. These shifts may seem distant, but they hit home. Oil market instability means higher prices at the pump and in the supermarket. If the dollar's dominance fades, Western nations could face rising costs and lower living standards. For some developing countries, the yuan system offers cheaper energy, but new dependencies on China. Others may be caught in the middle, forced to choose sides. As the global system fractures, uncertainty becomes the new normal. Ordinary people everywhere will feel the impact in their daily lives. January 2026 marks a turning point in global energy. Venezuela's yuan-based oil hub is the boldest challenge to the petrodollar yet. The world is shifting from a dollar-dominated order to a multipolar one. The U.S. response will shape what comes next. Aggression could backfire. Restraint may only slow the trend. De-dollarization is underway, and other nations are watching closely. Energy is the lifeblood of the modern economy. Its trade rules shape global prosperity. As the old system cracks, instability and realignment are inevitable. New alliances will form, and the global map of influence will be redrawn. The story of Venezuela's oil hub is about the future, about power, ambition, and the struggle for a place in a changing world. The world we knew is gone. What comes next is unwritten.